The rupee was trading well within the 75.00 level in the last week, with its range restricted to between 74.70 and 74.95. In the period from the beginning of the current financial year till date, the rupee had appreciated by 0.95% in absolute terms. The domestic currency recorded an all-time low of 76.9050 on 22nd April 2020 and a high of 74.5075 on 6th July 2020. In the last 3 months time frame, the country has attracted over USD 22 billion worth of direct investments, besides close to USD 15 billion from expatriate remittances. RBI absorbed all the surplus dollars from the market to maintain a stable exchange rate close to the 75 level. During the period from the beginning of the current financial year till 31st July 2020, the forex reserves registered a whopping rise of 59.01 billion, and the BSE Sensex also recorded a significant rise of over 28% in the comparable period, but the appreciation in the rupee was limited to about 1%. The massive intervention from RBI has prevented the rupee's rise beyond the 74.50 level. In the absence of active intervention from RBI during the above period, the rupee must have risen past the 73 level, making the exchange rate uncompetitive in the background of sagging export growth and lower demand in the overseas markets. The intervention strategy adopted by RBI proved to be the right approach in managing the external value of the currency. The absorption of surplus dollars from the market boosted the forex reserves, and we feel the active and frequent intervention from RBI clearly indicates their intention to keep the rupee broadly stable within the 75.00 level for some time. The forex reserves increased by USD 3.62 billion for the week ended 7th August 2020. The forex reserves of USD 538.9 billion as of 7th August 2020 constitutes close to 90% of the external debt of the country. The portfolio equity inflows of more than USD 3.6 billion received in this month till 13th August led the rupee to remain broadly stable and trade in a narrow range between 74.70 to 75.00 in the last 2 weeks time frame. We understand that a series of Indian companies are looking to raise funds by way of QIP of shares, rights issue, etc., which would enable the currency pair to maintain its stable undertone till the end of next week. RBI has succeeded in controlling the volatility in the USD INR currency pair, as its implied volatility fell from 9.50% in end March 2020 to about 4.6% as on date. The huge capital and current account inflows into the market led to rupee's appreciation by about 1% during the period from end March 2020 till date. It should be noted that despite a steep rise of over 30% in the BSE Sensex in the above period, the rupee's appreciation was the lowest among the Asian currencies in the comparable period. RBI, in their MPC meeting on 6th August 2020, kept their policy rates unchanged, citing inflation risks in the calendar quarter. As a result of July inflation coming around close to 7%, the yields on various money market instruments have increased a little higher. As a result of a moderate upside adjustment in domestic interest rates, the forward dollar premia inched slightly higher across the maturities. The 3-month and 6-month forward dollar premia ended the week at 3.73% and 3.80% per annum respectively. The forward curve beyond the 6-month tenor and up to 12-month maturities demonstrate a moderate steepening pattern at the long end of the curve.